Let's tackle a question I hear all of the time. Can you be a dividend investor and still care about growth and capital appreciation? Quite a number of you guys have been asking me if I have a Discord. Yes, I do. I have a Discord as part of all 3 tiers of my Patreon. I'll leave a link in the description below. But depending on what tier you pick, you get lots of other exclusive perks and it's super exciting. So go and check that out. Anyway, back to the video. You might be thinking, dividends. Boring. I only care about growth. But hear me out. Dividends can be a super important investing tool in your investing toolkit. And it is totally possible to prioritize both dividends and growth. So let's dive in and see exactly how we can balance both of these 2 goals and create a portfolio that is not only diversified, but is also fun and motivating. First things first, what exactly is a dividend investor? Dividends are just payments made from a company to all of its shareholders. They're kind of like a present from the company to the shareholder. You don't have to clock in at 9 a.m. and check your work emails to receive a dividend. It's completely passive. So why would someone want to focus on dividends? Well, like we just said, for starters, they can provide a passive, steady income stream. Completely passive way of getting an income. A caveat to this is that you don't really start to build a proper income unless you've got a really big portfolio. But gradually over time, you can get there with many, many years of dedication. And I guess that leads on to the next reason, which is you can build them up over time, reinvest your dividends, and see the effect of the snowball compounding growth of dividends. The next one is that dividends can be a sort of indication, a sign, if you will, that a company is financially stable. If they're able to consistently pay their shareholders dividends without any dividend cuts, and especially if they're able to increase those dividends year on year, it's probably very likely that they're in a good place financially. And the last reason I've come up with here is that it's quite psychologically motivating. If you're able to see those dividends trickle in, even if they're pennies at first, they start to grow and you can track them. That's exactly what I'm doing here on this channel, and over time they get bigger and bigger, and it just makes you want to keep going to see how big you can get them, and just the change between month and month and year. I think it can really help someone stay committed to investing. I just want to make it clear at this point though that although I do focus on dividend investing on this channel, and that is somewhat reflected in my portfolio, I don't exclusively want dividend paying companies in my portfolio, and I definitely don't think dividend investing is the only good investment strategy out there. Like, I have exposure to growth stocks in my portfolio. I have Tesla, for example, in my general investment account. And I also have VUSA, which has a lot of different growth companies in as well. When I'm recording this video, Tesla is at like an all-time low. And I am actually considering whether I want to invest into Tesla in my ISA, but that's not really what this video is about. Just a sidetrack note for you guys there. Growth investing is when you try and focus on finding those companies that are ready, that are geared up to high amounts of growth and capital appreciation. The ones that are going to see a rapid increase in the asset value. The idea is that you find these companies early, you invest, and you get ready for takeoff. And you try and ride that right up until the very top. I mean, you don't have to time it, but the idea is to make as much money as possible off of that initial exponential curve that a company can go on. And it does happen. There's many stories. For example, I've read quite a few on people that have bought into Tesla. And let me just tell you one now. I've mentioned this guy quite a number of times on the channel, and that is Jason DeBolt. He's someone that bought in to test the stock when it was like $7.50, and he just kept buying in and holding it. And at the age of 39, he was able to retire a multi-millionaire. There was other factors that came into play. He had quite a high paying job and things like that, but essentially he picked a good growth stock and it paid off. So the potential reward for growth investing is absolutely crazy. There's no denying that it can really, really do good things. It's like with anything though, it does come with its own volatility and risk. And if the company doesn't meet its growth expectations, the stock price could take a hit. And we've definitely seen this in the past year or so with a few growth companies out there. And I know myself, I have invested into companies that I thought were really good, ready growth stocks, and so far they've not turned out to be that. And I've definitely watched my money just trickle down in the account. But we all live and we learn, and maybe those growth stocks just weren't very good ones and I should have done more due diligence before I put my money in. I guess it's always about risk versus reward. So back to dividend investing. We've mentioned some potential benefits, but I would be really silly to sit here and pretend that there are no downsides to this type of investing, because there are, and I completely acknowledge them. I think the biggest argument against dividend investing is that if you invest into a dividend paying company, that company is obviously prioritizing paying their dividends, and that may mean that the profits that they make, the cash that they have, isn't actually going back into the business to continue to grow it. It's going out to the shareholders, and therefore the company may not see very much growth. Another risk with dividend investing is dividend cuts. If a company's financial situation worsens, they may decide to lower the dividends, or they may decide to cut them completely in order to sort of save their finances. It makes sense, something's got to give in order for them to start getting back on track, but as a shareholder who may be relying on this company for a steady income, this can be quite tough. You can somewhat try to avoid that though by investing into companies that have been able to pay their dividends for many consecutive years, or even the companies that have been able to increase those dividends with no decreases and no cuts for many, many years, like the dividend aristocrats. Now we come to the big question in this video. Can you have the best of both worlds? As Hannah Montana said, can you prioritize both dividends and growth? The short answer is absolutely, and I can't believe I just quoted Hannah Montana in a video on investing. One way to do this is to combine dividend and growth investing inside of a single portfolio. By doing this, you can create yourself a more balanced and diversified portfolio, and it definitely allows you to take advantage of different market conditions. For example, if the market is not doing so well and the economic situation is a bit bleak, typically dividends can come in and save the day because they cushion the blow a little bit. But if the market is in a bull run, you'll want those big growth stocks so you can ride that as well and enjoy the returns. And there are a few ways that you can combine both of these types of stocks in your portfolio. One option, and it may take a little bit of time to achieve, but it's to seek out companies that offer a dividend but also have growth potential. These companies tend to be more established than the growth stocks that we might recognize, but these are companies that have consistently paid their dividends but are still growing and are still reinvesting back into their business. I mean, you may find that this isn't strictly a growth stock or strictly a dividend stock if you go and look it up, but one example that I can think of just off the top of my head is perhaps Microsoft. Another strategy that you could take to achieve this is basically allocating different parts of your portfolio to dividend investing and to growth investing. And this sort of gives you a way to get exposure to both and to tailor your portfolio depending on your risk appetite of both of these types of investing as well. I actually kind of do a mixture of these two things. So I have some companies that are dividend payers but are still experiencing growth. Maybe not the rapid growth that we're seeing in some companies, but they're not completely stagnant. And I also do have a certain section of my portfolio more towards growth stocks, but I might add to that in the future as well. Like I was mentioning with Tesla, I'm not someone that wants to be in this box where I can only invest in dividend stocks. I love dividend investing for the reasons that I mentioned earlier, and I'm going to continue to do that. But put in some exposure to other things in my portfolio as well. I'm not against it. But remember, with any investment, you need to do your own research, as this is just my opinion and not financial advice. If you'd like to add anything to this video that I may have left out, please leave it in the comments below. Thank you for supporting this channel. Remember to go and check out the Patreon page. Super excited to see some of you guys over there. Thank you for watching. I'll see you in the next one.